is British pound US dollar. So is this bearish or bullish?
Can you change it to
Bullish.
line charts? Let's just
Bearish. That is bearish.
What about
Now
you?
that is
Val?
it's
God's time said bearish. What about you, Val? Is it bullish or bearish?
it's bearish because aside the higher high that we made, we've been creating lower lows and lower highs.
Exactly. So you guys got the answer right. So this right here is consistently creating lower lows and lower highs, right? And the reason why I want to use this as a point of reference to still show you something, sometimes market structure can show you something and you will have some other reasons to go against what you're seeing on this 12 months. So despite the fact that this 12-month time frame right here is showing us bearishness, I'm personally bullish on GBP US dollar. And I'll explain to you guys why I'm bullish. Now, you both got the answers correctly. This 12-month time frame is creating lower high, lower lows, and it's bearish, right? Now, the market can actually be bearish for a long time only to reverse and now become bullish. The question is, how will you know that this market is reversing and now going to become bullish and not continue to be on that bearish side of things? How you can know is, number one is you can know using interest rates. This is number one way you can know. If the interest rates for a particular pair keeps going up, there's a very high chance that pair is going to reverse and start going to the upside. If the interest rate, this is why I sent you guys one of the first videos I will send you is on interest rates. Most people watch that video and then boom, it goes in from one ear and it leaves from this other ear. And I'm not surprised. It's the most uninteresting video I ever made. Like even when I was making the video, I couldn't wait to finish and just say, yeah, I'm done. Next. Because it's the most boring part of trading, having to look through the interest rates to see whether the interest rate is going up or it's going down. If you go and check the interest rates right now, you guys can check it on your own and tell me what the interest rate is on using economic. What's the name of that website? Can you recall, Val? I think you're the most recent person to watch that video.
Let me see. Uh, Trading economics.
Trading economics. So if you go into there, check GBP, what is the current interest rate? And then check US dollar, what is the current interest rate?
Yeah, just a minute. Okay. So GBP, the current interest rate is 4.75, and US dollar, the current interest rate is 4.5.
So as you can see now, we're currently on GBP US dollar, and GBP interest rate is 4.75 and US dollar is 12.5. And we're already even hearing Trump say they want to cut rates even more. They want to bring down the interest rates even more. Now, what does that tell you? It's telling you that GBP has already, currently, GBP has a higher interest rate over the dollar. So if I'm investing on the dollar against GBP, anyone who's invested on GBP is going to have a higher interest. There'll be higher profits than someone investing in the dollar. And someone investing in the dollar is already having at the back of your mind that they're actually going to even bring it lower. So someone invested in GBP is going to be making more money than you eventually, even in the future, not even just the present, from present to the future. So if you were to flip a coin and you're like, which one am I going to choose now, randomly, without technical analysis? Which one are you going to choose? The one that will make you more money or the one that will make you less money and you know that will still make you even more less money? Which one would you choose?
One that will make you let more money.
More money.
That's the thing. It's just normal. Every normal person would choose the one to make you more money. There's nothing bad about wanting more money. It's just normal. It's natural with us human beings. We want to make more money. Now, this goes into play. This is why watching that video and understanding what it means will help you in the long term to know when this market is shifting structure internally before breaking this external structure. We have this external structure here, this high. And you can see how internally we've created a high, created a low, failing to run the low, and we still created another high, breaking above the previous high. Us coming down here, if we were bearish, if this market was bearish, I would have wanted it to drop lower to break this low and close. If this candle had dropped lower to break this low and close, then I'll be looking for sell opportunities. But because it didn't break and close, and if you even use the Fibonacci from this low to this high, you can see that we literally came to an extreme discount. From this range low to this range high, we came to this extreme discount and we saw this massive rejection of that extreme discount zone, failing to break this significant monthly low. So any rejection from here could potentially even take us to rally. And what do you have resting right here?
Low resistance
Low
liquidity.
resistance liquidity.
So whatever is happening right here could literally be engineering price to rally above here to break this significant monthly structure. And the moment this significant monthly structure is broken, we want to see a retest and then we want to see a rally, a major impulse rally on GU. The reason why I wanted to use this as an example is because sometimes you can also be wrong by looking at the 12-month time frame alone without using other things, other indicators like the interest rates and also the internal structurals to know when the market has shifted structure from bearish to bullish. Does that make sense, guys?